Hi guys, welcome back. I'm doing another tutorial here, and in this tutorial I want us to talk about some some things here. I want us to talk about some concepts here that I'm going to explain them in this video, guys. And these concepts uh, are very important for you to know as a forex trader, guys. So first of all, let me do a small recap on something that I talked in my previous videos. So I'm doing tutorials that are just simply explaining some concepts of trading. It can be a forex trading platform or a cryptocurrency trading platform. So first of all, let me just clarify something here that for forex trading, forex market is the most liquid market in the world. Forex trading market is the most liquid market in the world, with which trades a volume of over $10 trillion per day. So this is a very liquid market that you can get in and get something from it. Get something from it. That is, if you have a very good trading plan, a very good trading mindset, and a very good skill, right? So what is forex trading, guys? Let me also talk about it here. Forex trading simply means it is a forex stands for foreign exchange, guys. Forex stands for foreign exchange, and as you all know that we normally have some exchange of currencies at the banks, right? Normally have some exchange of currencies at the banks. You can exchange your Kenyan shillings for what? For a US dollar, or you can exchange your euro for a dollar, guys. Similarly, you can exchange your Ugandan shilling for a Tanzanian shilling, or you can exchange your Tanzanian shilling for a Kenyan shilling. So that activity is what we call that activity that takes place there is what we call forex. Forex, yes, because it is it is a it is simply a foreign exchange. That exchange is what we normally call forex, because it is what it is a foreign exchange. And so many people have been coming to me and asking me that is forex real? Is forex a scam? Is forex something that somebody can rely on for their livelihood? And guys, what I can only tell you here is that forex is just a business like any business that you can be interested in and start doing, right? You can be a seller of eggs in the marketplace. You can be an investor in the real estates. And as a business like any other businesses, you have to put in the work for you to get good returns, to get good profits. Any business, if you don't put in the work, guys, it won't work. Any business, if you don't put in the work, it cannot work. So as I've explained before, forex, you just have to learn a skill and know how to execute. After learning a skill, you will be required to do what? To put in the work now to make you make profits, guys. So if you have any question concerning forex trading, you can post that question in the comment section. You can post that question in the comment section. So basically what I want us to do here is to learn a few concepts. And these concepts, the first concept is that I want to talk about is about how to put your orders in the forex market or in any trading market. Like this one is an Ethereum versus USD market. So this is a cryptocurrency market. So first of all, before you put your order uh, in the market, you need to do what? You need to do what we call analysis, market analysis. And for you to do market analysis, you need to learn some skills. You need to learn some skills. You need to have some technical skills. You need to have some technical skills for you to identify the areas of value, that where you really consider when you place your trades, or when you want to put your orders, guys. So I don't want to go into much detail. Let me start right away. So I want to talk about these orders, and these orders, we have very different orders that we use when we are executing our trades. Really, uh, when we are executing our trades in the market, guys. So you'll bear with me. I will have some few interruptions, guys, but just put your focus on what I'm talking about. So first of all, what are these types of orders that I want to talk about? The first order is called market execution, or at market execution. At market execution, guys, is whereby you do what? You click buy or you click sell. You click buy or you click sell. Instantly, then your order will be put in place, right? That is at market order. So how do you execute that at market order? First of all, you need to look the areas of value where you have to place that order, right? So you will start by doing your analysis, your technical analysis, and your fundamental analysis. So like in this chart that I'm having here of Ethereum USD, you can see, guys, it is a very clean chart. It is a very clean chart, right? It has nothing on it. I've not done any analysis on it. I've not drawn anything on it. But first of all, as a forex trader, or as a trader, you have to do your analysis for you to identify that area of value that you can place your order, guys. So let me start right away doing what we call technical analysis. So I want to do technical analysis so that I can identify an area of value that I can place my orders, or I can place my 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 at market order. So let me start by doing my technical analysis. I start by finding my areas of value. Like first of all, I need to do what? To identify the trend in this market, right? I need to identify the trend of this market, guys. So what I will do, I have to know that is this market trending downside or upward. So from like let me say from from here, I'll pick this point, from here, sorry, sorry guys, a bit, sorry. So like from here, from this point that my arrow is, my cursor is, I'll have to draw a pointer like this up to this area up here, right? So you can find that from this area the market was trending upwards, right? So we can call that this, from this area up to here, the market was, we can say that this, from this area up to here, the market was in uptrend, guys. The market was in uptrend from here, coming up to this area, right? Right. So let me mark another area so that you can be familiar with it. Then from this area, guys, the market was trending upwards, right? The market was trending upwards. The market was, yeah, I can put it like that. So the market was trending upwards. I just have to mark some few areas so that we can do what, and get to know what we are doing in a more simple way. I want to explain this concept in a way that even a class 8 student can understand this concept. Can understand this concept. So I've said that from here up to there, I've identified the trend. Now let me identify another trend. Let me identify another trend, guys. You can see that from that uptrend, I have another trend. I have another trend, guys, and this trend is coming from this area. Is coming from this area, coming down, right? That is another trend, which is a downtrend. Which is a downtrend. Let me mark another area. From this area, you have a trend that is coming is up to here. So our downtrend, our downtrend, our downtrend, our downtrend, our downtrend, our downtrend started from here. Our downtrend started from here. Downtrend started from there. Then it ended where it ended somewhere here. Our downtrend ended there, and our uptrend, our uptrend. Let me show you where our uptrend started. Our uptrend started here. Our uptrend started here. Then it ended at this area. That is where our uptrend ended. So how do you identify an uptrend? You identify an uptrend when you have some higher highs and higher lows. So guys, let me tell you something. Like here we have our low, our low, right? Then you have our high. Then you have our low. Let's see, this is our higher low. Then this is our higher high. So if I draw this trend line, you'll see that here is our trend started here, which is where we have from our low, guys, from our low, sorry, from our low to our high. This is our high, and this our high. We can say that we can call it an impulsive move. An impulsive move. Then after our impulsive move, we will have a drop. That drop in the price, we normally call it a pullback. We normally call it a pullback. So this is our pullback, right? That is our pullback. Touching this line, yeah, right? That is our pullback. Then from our pullback, so this is our higher low, right? Then we shall have another impulsive move, starting from here, coming, sorry, starting from here, coming up to there. That is an impulsive move, right? So if this is our low, this is our high, then this is our higher low. So this is our higher high, right? That is our higher high. So from that pullback, from that impulsive move, we shall experience a what? A pullback. We shall experience a what? A pullback. So our pullback starts from our higher high, coming downside up to this area. So this is our our pullback, guys. So this will be our higher low, right? This will be our higher low. So after pullback, let me explain something here. How do I identify a pullback and an impulsive move? So a pullback starts from the from the highest point of the price, right? Coming to the lowest point where the price had a bounce up. So for me to get a pullback, for me to have a pullback, I must have a what? For me to have a pullback or an impulsive move, I must have what? I must see two candles that are of different colors. Like in this case scenario, I have two green candles, yes, right? Which means the market has started changing the direction, going upside. So this signals for me that the market is trending up again. So I can mark this area as my support area. I can mark that point as my support area. So from that support area, I'll get my pullback, right? I'll get my pullback. Please, guys, post your comments in the comment section. So pullback, from that pullback, I'll have my 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 higher high, right? My low my lower high, right? That will be my lower high. Remember, guys, the trend is changing now. So this is my support area. Similarly, I have some support area here. Let me delete this one. Similarly, I have some support area, here. This is my support where the price started. So if this is my support, then my resistance, I need to have my resistance. My resistance is somewhere here. This is where my resistance is. Guys, you can ask me questions where you don't understand, because some people have been asking me about support and resistance. So this is my support. The resistance is an area that the price got rejection, then it fell down. The price of this Ethereum got rejection. Its value was lowered by the strength of the US dollar, right? So the price had to drop up to this area. So this is my resistance area. And remember also, the resistance area, we normally call it a supply area. And the support area, we normally also call it the demand area. So we normally buy at the demand area and we sell at the support area. Because you buy when the price is low, and you sell when the price is high. That is the concept. You buy here, you buy at the support area here. This is the support area, that is where you buy. Then you will sell at the resistance area. So if you bought here, guys, so where do you sell? Where do you expect to sell your assets? Right? You will have to sell it at the previous resistance area. So you'll get in here, then you'll definitely sell. You'll definitely sell at this area, guys. You can ask me questions in the comment section. So you'll buy here and sell here. So you you have also seen that when the price got here, it got a bounce up. So this bounce up, we normally call it an impulsive move. Right? That is an impulsive move. So guys, what I want us to do, I was talking things to do with the market orders. So how do I execute market order? Since I've told you that you buy when the price is low and you sell when the price is high. So if you are in this market during this date, let me pick a date. Maybe you are in this market on which day. Yeah, let me pick that day. Let me pick this day because this is where my my demand area is. So if you are in the market on this day, right, which is Sunday 22nd June 2025. So if you clicked buy because you saw that this is a demand area and the price should bounce up. So if you clicked buy, your buy button, guys, definitely you got into profits. Got into profits up to this area. So if you got into a profit up to that area, it means that you had to put your target at this area. You had to put your target at this previous resistance area. You see, at this previous resistance area, which was formed on Sunday 8th June 2025. Remember, yeah, on June 8th 2025. So you bought on which date? You clicked buy on which date? You clicked buy on 15th. No, not on 15th. On Sunday 22nd 22nd June 2025. So that is what happened. So that is where you put your target, right? That is where you put your target. And guys, if you put your target, you also have to identify a place that if your analysis is wrong, you need to get out of the market with a small loss. So if you put your target there, guys, what you have to do is to do what? Is to put your stop loss somewhere here at the slightly below your support area. You just put your stop loss slightly below your support area, and you can see the price there was 20 was 2048.779. So logically, let me try to explain a concept here. So you bought in at 2000 2400 2425.08. That's where you click the buy button. Then you set your stop loss. You set your stop loss at uh, at 2061.58 0.54. So guys, logically speaking, you can see there is a difference in figures here. So if you take 2425 and 25 minus, if you take 2425.08 minus 2061.54, then you get the difference, guys. You can see clearly that how much you are risking to lose in that trade. I'll talk about position sizes, which will also elaborate more on this concept, which will make you understand more about this concept. Yeah, so if you get this difference, you can see there that the points that you got here, the difference in points that you got here, are the ones that they determined how much you are losing in that market in that day. In that day, suppose the market could go against your analysis. Suppose your analysis could be could be could be done what? Could be invalidated, guys. So let me see your target. If that, because supposedly you made a profit. So where how much profit could you have got? So this is the profit that you could have got. If you take 2,877 and 77.90 minus 2,425.08, the difference you get here is your profit that you could have got in that trade, guys. Remember, that was now your profit on this trade. If you could have clicked buy button on this day, which is on this day which is Sunday,